Okay, so some of you have requested for a video on how I took the trade on GBPUSD. This is the 12-hour time frame. As you can see, price has been breaking these lower lows, the structure broken, and every time a structure is broken, there is a high probability that price returns to the origin, okay, to 61.8% and above. You can see I don't even have a 50% on my fib level because I require price to come above 60%. So price took out this low, price came back, we have a gap in here, there is an order block, price touches it, and this is the 12-hour time frame. And if we go to H4, this is what happened. Price took out this high, it touched the order block, and it filled the gap. This gap was filled. I was telling some people that I don't take trades on gaps. I always wait for price to also touch the order block. Okay, so those that's how I trade. So let's switch to H1. Now you can see the clear picture. Price took out this short-term low, price came back, price broke this low. This is the trade I took yesterday. If I put a fib from the high to the low, I know ICT teaches not to use the wicks, only the candlesticks. I prefer using the wicks. Okay, so from this high to this low, a break of structure, I put this horizontal line to mark a break in market structure. Price goes to 0.70%, which is also 0.7. It touches this order block, okay, and then this is where I look for a sell on M5. Okay, it is your duty to go on M5 and look for a shift in market structure. So let's look at today. Today we had interest rates for the United Kingdom for GBP pairs, GBP British pound. So we have a break in market structure. We have this low liquidity pool, these highs liquidity pool. Okay, so I waited price to return to this area. That price goes into my zone. Okay, M30. Let me go to M15. All right, right here. So price clears these highs. Remember, I'm not interested in shorting. If I put my fib, anything that is below 61.8%, I am not interested. And even if this was, let's say this is 61.8, I look on the left, there is no corresponding order block or supply, whichever you use, then I'm not interested. I want this zone, it's above 79%, it's between 79 and 100%. Also, we have a bearish block, order block. The last up candle before the move down. And we go to, so let me remove the fib. Let's go to M. You can see there is a break in market structure. Okay, let's go to M5. Now this is where the magic happened. This was the interest rates. If you go to M2, let's go to M2. You see what happened. There is um, there is already this, you can see a low, a high, higher high, we break it. All right, this is a market, a smart money reversal. This move took out this low, price returns. However, price shouldn't have gone all the way up. It should have come at least to this level, and then the market should fall. However, because there was interest rates on the British pound, you can see this spike. It took out all the liquidity on this high that I showed you. You see, this high was taken out, so all the stop losses, everything in here, it's gone. So if you go to back to M2, all right, this I had already had my analysis. This candle came, this is now M1. This candle came up, down, closing below, according to my analysis, according to this structure. I entered on the second candle. Because they have already grabbed the liquidity, there is no more interest for smart money to go back again up. Okay, and this is where the name of my model come from. The algo footprint. Why? Because I always enter after I have identified the footprint of the algorithm. This is an algo. I noticed this is an algo taking liquidity. I know once the buy side liquidity is taken, price has to fall. And I entered on this candle. And if I enter the sell, now momentum has come in the market. What is my target? My target is this sell side liquidity. These breakouts, people are going to start sales from here, because retail, we are taught that once price breaks here, it's a retest, you sell to continue. Wrong. This is where you take your profit and you are satisfied for the day. So this is how I took the trade today. Same thing. It's the same way. It's the same thing as yesterday. Is 1:10. All right. The video is getting longer than I expected. Someone else was requesting me to show EURUSD. Why did I buy here? Like the last trade I had, why did I buy here? Why? All right, look at this. Now let me there is what is that? There is something I normally use from here. This should be, no, not this. Let me see. path. Yeah, it's this. Okay. Now, when price comes here, makes this low, okay, this low, price goes right here. This is on H1. Then price comes here and returns. I want to show you something. Okay, so liquidity has been grabbed from this low. However, in as much as my interest is to sell on this level right here, break of market structure, we return to sell. There is another structure that has been built right here that price has left. You see? You see this? And you see this? You see this? Now, this is why many people lose in this industry. You need to know about liquidity and market structure. This is the backbone of my trading model. Yes, we are looking for sales, but what about this structure? This is what I call an opposing market structure. Why is it an opposing market structure? Because it is opposing the sales, the intended sales that are supposed to be made from here. Price is not, this structure will not allow these sales to happen. That's why if you sold from here, you should take profits right here and buy from here to take out this liquidity. All right, right here. But that is an advanced level to know the market structure, the opposing market structure. Okay, and then a low, a high, equal highs. All right, more equal highs. What does that tell you? Price comes back to here. All right, you take your fib here at 61.8%, buy here, and you hold. You take out this liquidity. All right, but the main target was this. Okay, now because we're getting in, there is NFP tomorrow and it's weekend, I can no longer hold it because NFP is going to change everything. So this is an opposing market structure, but this is advanced. You could just focus basically on this kind of, hold on. You could basically focus on this, on this kind of setups. All right, right here, look for a price of value right here, and you take it back up. As simple as that. All right, stay safe.